In this video, just want to speak on the development I've gone through as a trader and that we will have to go through as a trader, and some of the illusions that we need to break, um, the detachment from our ego, from our impulses, and from the false confidence that we experience, which encourages us to take an entry, or move our stop loss or take profit, whatever the case may be. But that false confidence comes from one thing, and it comes from the care that we put on wanting to be right. The market does not care if you're right or wrong. Okay. And so I had to understand that it's not about being right. And that same thing, I often thought, like, I don't care about being right. But then I found myself in an entry, right, 15 minutes later, and before I got in the entry, I had my stop loss and I had my take profit set. But then I'm in the entry, and 35 minutes later, 40 minutes goes by, and it didn't work out as quickly as I would have liked. It didn't, and it didn't invalidate my trade right away, right? And so what ends up happening, what I used to do a ton, right? And this is when I started shifting out of that need to be right, because it doesn't matter. And I'm going to get into why it doesn't matter. And I'm going to share three things that I use now to keep me so far away from needing to be right when I am trading. And I'll just show this on my chart really quick, just so you can see kind of what I'm talking about. All right, so I want you to see an example of what I'm talking about, of what I used to do, right? So pretend we're in like an uptrend, right? We're in an uptrend. We would be taking buys, right? That's what we'd be looking for. And say we enter a buy right here, right? Say we enter a buy right there. That's where we enter our buy, right? We put our stop loss, and this is just an example. I just want to show you something. We put our stop loss at this low right here, right? And we put our take profit up here, right? And so let's just say that that followed my system, right? Followed my system to a T. I've accepted my risk and I've accepted my reward, with my take profit here, right? But then what starts to happen is this trade starts to unfold a little bit more, right? And it starts to do something maybe like this, right? Maybe like this. And it hasn't gone anywhere yet, really hasn't got us in any, significant profit, and it hasn't moved to our take profit, so our initial target, right? But what it has done, it's played around at this bottom here. And what I have done in the past, and this is, and seeing it now, I know this has to do with me caring about being right in the market, because that is something we want to protect. It is almost universal between human beings. We want to protect our opinion, okay, and our perspective. We want to protect that at all costs. And so we have to be really aware of that when we're on the charts, because the market doesn't care. The market doesn't care. It's going to do what it wants to do every time, regardless of what you want to see and what I want to see, no matter how good your technical analysis is, or your fundamental analysis, or your indicators. None of that matters to the market. And so what I would have done, what I used to do, old EHM trades, right? And I'll be honest, there are times where I still fall into this pattern, but I catch myself, and what I'll do is I'll move it back to my original risk to reward, and I'll just let it be, right? Because we can see right here, price is very close to stopping us out of this trade, right? All price has to do is come right down to this 47.8 level roughly, and we're stopped out of this trade, right? And as we're seeing that, this is what I used to do. Say, okay, I'll just slide it to the previous low. I won't move my take profit, right? And so now I went from having a 3-to-1 on this entry, and now I'm down to 1.7 to 1, which is it's still more than a 1-to-1, but now my risk is greater. Now my risk is greater, right? And what then happens? What then happens 90% of the time, after I do that, right? It then goes boom and stops me out. When if I would have just let it come here and stop me out, right? That was half of my like I would have saved half of my let's just call it, $100 account. Like I went from risking, you know, for this example, this is UJ and this is on the daily, so this is 265 pips, right? I went from risking that to risking 441. And of course, I would never risk that many pips, but this is just an example. But we went from risking 2,600 or 260 pips to 450 pips. That's a significant change in our risk. All because why? All because I did not want to see me get stopped out at this point and my trade get invalidated at this point because of whatever biased or analysis I had that left me with the idea that price may turn around from here and go upwards, which is fine to see all. Like, I'm not saying that we can't think it's going to move now from a different spot. All I am saying is once we have determined our risk, once we have determined this was our risk we determined over here on this trade. Once we have determined that, we just have to stand by that, because if we don't stand by that and we are reacting to every price movement, we are ultimately saying we care about being right. We're not thinking about anything else. We're just caring about being right on this trade. And then what does that happen? It goes to the next trade, and it goes to the next trade, and it goes to the next trade, right? And then all of a sudden you're in a bad habit cycle of of when does that only occur? It only occurs when it starts to look like this, right? And when price starts to look like it's going to go invalidate your trade. That's when this pattern, that's when you'll get the cue in your head, right? Your brain will send off a warning, and it'll start making you feel all these different all these anxious emotions, and what you'll look for is, okay, how can I be right on this one? Because it looks like I'm about to be wrong, but how can I keep myself from being wrong? Right? And in this case, since we're so close to this, I don't want to get stopped out there. So let me just actually slide this a little bit lower. Okay, okay, now I feel better. Now I feel better. And then, we move closer down here, and I've even done like full transparency. I've even done this because of the amount of weight that I place on fundamentals, which now I'm gaining more understanding of um, just the duration in which the fundamentals have time to move, right? So I always refer to it as the macro trend when we're talking about fundamentals. So the macro trend versus the micro trend, I have a better understanding of that now to be able to utilize the technicals within the micro trend, and then understanding the macro trend is still going to move price in terms of the fundamentals. But when I'm looking at, the day-to-days and the hours to hours, news does change things. If it's a news day, then I may place more weight on a fundamental. But if it's not a news day and we're just leading up to news, or we've just moved away from news, then I put a little less weight on the fundamentals because it takes time for that to unfold. But what I would use to do is I would put so much weight on the fundamentals. Let's say in this scenario, this is, like I said, this is UJ, and let's say the dollar, like fundamentally, the dollar is strong right now. So for it to keep going down, right, it wouldn't, like, that wouldn't support the dollar being strong. So what I would do, or what I used to do, is even after I moved this one, and let's say it didn't hit my stop here, but then I saw it almost hit my stop, so I would move it down to this one, right? And then we would move closer to here, and it would almost hit my stop. And then I would say, okay, fine, I'll move it down to this very last low. right? Let me move it down to that very like there's just no way price could go down there and turn away from and stop me out from there. There's just no way. That's what I would think. And what literally is that? I literally just changed my entry three different times. Three different times. When what are we supposed to be doing? What are we supposed to be doing? We're supposed to be, let me do this. We're supposed to be number one, pre-defining and accepting our risk. That's what we're supposed to be doing. Predefining and accepting our risk. Number one, right? So when I put this original markup here, right? When I put this original markup here, before we got this was me predefining and accepting my risk and reward. Let me put that on there because the reward's a big one too. Like when we let's say just real quick, and I'm gonna get back into the other two, right? But let's say we get a beautiful entry and we just take off from here, right? We just take off from here. What have I also done? I'm like, okay, we attacked that really quickly. So let me move this higher, right? And now I'm chasing and trying to chase more profit instead of just accepting my reward at this level. And then what? I can't make this up. What happens almost all the time after that? We get up there, we get up there, and right before it gets to our take profit, we get some type of rejection. And then now we end up getting below our original take profit, right? And you know what I'm saying? And you see how it just starts to spiral just because of that small habit of wanting to be right, right? Wanting to be right. And it all comes from not predefining and accepting our risk and our reward. That's number one before we get into any trade. We have to predefine. So I'm not gonna say I'm not gonna say it's bad to move your stop loss or to move your take profit. I don't like looking at it as bad. I'm just gonna say it's gonna build an inconsistent thought pattern for when you're looking at the charts. It's not something that is going to be consistent, right? Because you don't know what is going to happen. So you don't know that you should move your take profit up or adjust your risk. You don't know what's going to happen, right? So number one, rule number freaking one, when we're breaking the illusion that we need to be right in the market. It's predefine and accept your risk to reward. Okay. And rule number two, think in probabilities, right? Thinking in probabilities. This is honestly one of my favorites. Shout out Mark Douglas. Actually found out Mark Douglas was out here in Arizona. So that's where we're based out of, Bloom, and that's where I'm based out of, Arizona. But I did not know that Mark Douglas, with the guru of trading psychology, was also based out of Scottsdale, Arizona, actually. But he talks a lot about thinking in probabilities. And I've watched a handful of his seminars that so thankfully that were recorded and just uploaded for us to absorb them and learn from them. But he talks a lot about thinking in probabilities, and I used to think that I did when I was still doing what I just showed you, when I was still sliding my stop, right? I used to think I was. Oh, but I'm thinking in probabilities, right? Because I know I don't know what's going to happen because that's what thinking in probabilities ultimately is. It's knowing you don't know. So if you have an edge, right, and let's say your edge is 80%, and you win 80% of the time, your edge presents itself 80% of the time. You don't know if that 80% is going to show up over a matter of 10 trades. So that means eight of those 10 are going to win, And even within that, you don't know if the first two are going to be losers, or you're going to have one loser and then five winners, and then one, because you have to get two losers in there and eight wins in 10 trades, right? You don't know the distribution in which your edge will present itself over any number of trades, right? Whether it's 10 or whether it's 1,000. But if we are thinking in probabilities, and which is my third point, and I'll throw that up here because it'll tie right into it. Identify your edge. Okay. Identify your edge. And I put identify your edge last because it's if you don't do these two before you identify your edge, it doesn't matter how good your edge is, you're still going to be trying to be right. And that is what we need to break our mind free from, is trying to be right in the market. We have to break free from that. And I put that last because if we constantly focus on predefining and accepting our risk, it doesn't matter which strategy you use, right? Because every time you're predefining and accepting your risk, you're just gathering data. And side note, log your trades, because if you're not, if you do, if you're not, if there's not a particular like system that you're following, or maybe you're trying to get data on a few different systems, right? Which in my opinion is completely okay, because first of all, there are a million different strategies you can use, but the most important part is controlling this and our mindset behind trading, right? And the motions that come alive during trading that are not just trading oriented, right? And so we are forced to work on them because of trading, but they are not trading oriented, right? Just man, just a quick side note. So um I was talking to my boy Q, and then his pops, he brought up a book called 10,000 Hours, which I have not read that book yet. But it's definitely a book that I will pick up and I will have in my library to read. Basically the summary from what Q's pops told me was, it takes 10,000 hours to mastery, right? So anything you want to do, it takes 10,000 hours to master it. And so then I was like, I started doing a little bit of math, right? And then I was doing math on how long I've been alive. I did the math. I was like, okay, if I sleep 8 hours, that means I got 16 hours. I did, 16 hours times, um, what it was like 16 hours times 365. And then I did that number times how old I am. Right. And it was like over like 150,000 hours or something like that. I was like, wow. So aside from when I'm asleep, I've been, I've been in control of this for 150,000 hours. Right? And we can even remove when I was a baby. We can take it. We can just remove to when I'm like two, right? So, but it's still over 100,000 hours. I've been consciously awake, right? And so when we think about the book 10,000 hours, it takes 10,000 hours to mastery. I've been awake way longer than 10,000 hours. So how, so what thought processes have I mastered? What reactions to emotions have I mastered? What perspectives have I mastered? Because I have mastered something. Per the book, per the 10,000 hours book, I have mastered something either by intent or by default. And so that book was just just even that initial introduction to that book left me extremely fascinated, right? And so when we're talking about predefining and accepting our risk, we are just training this. We are training the way that we see the chart and see risk. This is truly how we are changing the way we see and think about risk and reward, essentially, right? And so that's number one that we want to do, because every time, doesn't matter how good your edge is, every time you enter a trade, it's risky. right? Every time you enter a trade, it's risky. Every time you enter a trade, there it has a side of reward to it. So the more we can just continuously train ourselves on risk to reward, we'll get more comfortable taking risks to where we're just over trading, but to where we don't even have that initial, that part in the stomach that you feel when you're in a trade and all of a sudden you just get a bunch of volume out of nowhere. And you went from having, you in this case, you went from, getting some really nice bullish candles, you got all the way up here, and then you just got a tough bearish candle, like so strong. You just know there's no way that bears are not about to take over right now. Right. But then we get that strong bearish candle. It gets right down here. And then it starts moving back up. And it's just swaying you. You're like a boat in the water. And the waves are just, but we want to be firm. We want to be firm like a tree. We don't want to be like a boat in the water. Right. And so how can we do that? We can do that by predefining and accepting our risk. Okay, because once we predefine and we trained ourselves on accepting risk and reward, right now we begin to think in probabilities. Why do we want to think in probabilities? Because, like I said before, we do not know what's going to happen next. You don't. So if you think you know what's going to happen next on the chart, you are still holding on to the illusion that you can be right. You are still holding, if you, and I catch myself in my language, and that's where it'll come out. If you even think for a second, you know what's going to happen, you are holding on to the illusion that you can be right in the market. We can have our biases, yes, but we cannot have a 100% bias. If you have a 100% bias, what does that mean, Marcus? That means in this example, right, we see that we have been trending up, right? And so you're saying, oh, we've been trending up so long, right? We got key levels below here, right? We got fundamental supporting, we've been trending up. I'm 100% sure price is going to continue upwards. And so what didn't you do? You didn't identify the points in which price could potentially turn around from, right? You didn't identify that. So what I mean by 100% bias, it means that you only think price can do one thing on this given move, and that is never true, right? That is never true. I always like to keep myself in an area where I have an even bias. And that sounds like a bit of a contradiction. But what does that mean? It just means I'm weighing both sides of the coin, right? Both potential outcomes, whether we continue to buy or whether we sell off of this area. Like I'm weighing both outcomes the same, right? And I'm just aware of the possibility that either one can happen, right? That is what I mean when in terms of thinking in probabilities, right? Because we don't know what's going to happen, and so we have to be aware of anything could happen, right? But then when we use number three to support number two, right? This is the juice that this is the part that I want to get into the most because the identifying your edge is really important for how, I won't say easy, but how willing we will be to do these, right? Once we identify our edge, and how is that going to come? It's going to come from back testing. It's going to come from being engaged in the market or forward testing. It's going to come from um, being a part of a community who's identified an edge, right? Because of the forward testing, the back testing that's gone on there. However it gets done, when you see your edge present itself, now you need to be thinking in probabilities, right? Because let's say you've encountered your edges of 50%. You 50% of the time you enter, you win. 50% of the time you enter, you learn a lesson, quote unquote, lose the trade, right? And so you don't know over a series of four trades. You don't know if the next two are going to be losers and then the remaining two are going to be winners. You the thing is that that's it's just follow along when I'm saying this, right? So let me do this actually. Let's do this. Let's do this. One, two, three, four, five, six, seven, eight, nine, 10. Right. So I have 10 trades right here. Right. Right. You don't know if if this is gonna be a winner, right? You don't know if this is gonna be a winner. You don't know if this is gonna be a winner. We could skip one, two, and then this would be a winner, and then we could skip, all these, and then this is gonna be a winner, and this is gonna be a winner, and boom, that would be our 50%. Right? That'd be our 50%. But you plan to take more trades, right? Like in the future, right? So then we add 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. All right. We add another 20, right? And you don't know if over this next, like, because now it's out of 20. So now 10 of these trades per my 50% win ratio are available, right? But we don't know how that's going to be distributed. We could literally lose the next 10. Why would that be important? Because if we add another 10 on here and get us to 30, right now we're expecting 15 out of those 30 based on our 50% win rate to be profitable. Then we can, and then we just keep extending it out, right? But the point is we don't know when our edge is going to come up. So we have to just identify our edge. When our edge presents itself, we have to predefine and accept our risk. And the we have to accept that this is a chance that I get to see if my edge is going to present itself. And that is an investment I'm willing to make on my education and the data that I'm getting from my edge and from my experience with the markets, right? And so once your edge comes up and you see your edge present itself, or you see your edge about to present itself, however you want to approach it, as long as you are pre-defining and accepting your risk, and side note, logging your trades so you can get data, so you can gather data on it. Right. And I'm even coming around to it, which I haven't done this a ton. I used to be like more of like a quick note taker. Like I want my time. I always want my time that I entered and my risk that I'm taking. So in this case, I would put 274 pips in there. And then um and so I always want those two pieces and then my lot size. So I want to know based on those 274 pips, I want to know my actual lot with that. One thing I like about TradingView is it tells me my actual price, which other platforms do this as well. But when I enter, like, because I trade on TradingView, so when I enter on TradingView, it brings up a portion where when I slide my stop loss, it doesn't. It shows me in pips, but it also shows me in dollars. So that's why I like to write down just a dollar amount too, when I have it. And so time, risk, um, and it's those two things that I really care about the most. The time I enter, the time I exit, my risk, of course, pair and date. Um, But what I do now is, and actually I adopted this last week. I gave myself a little bit more of a, like, I typed up more of my thought process behind that trade and what I was looking at. Because per my last video, when I talked about the Ichimoku cloud, I was talking about my freedom within boundaries, right? And I have a few systems I like to use, and in order for me to get the data that I'm looking for, um, from my systems, I need to have a little more extensive note taking based on what I saw from that entry. So this is actually something I encourage more, because what I found is when I went over my trade log and I pulled them up, like just having the time, like just having the minimal information there, of course I'm able to go on the chart and see, okay, I entered at 555, was my edge present, right? And then I go from there, and then um depending on how that trade ends up, there's just not really much for me to go off of beside, was my edge present? Did I accept my risk? And then what was the result? But I want to have a little bit more to go off of, right? So, and it, I have the time to do it. I used to make the excuse, I don't want to, jot down some notes. I'm in the trade, but like I'm not in and out of trades like that quick. And if I am, then it's by default, which means it either hits my risk, my stop loss, or it hits my take profit. So I have time to type out, my thought process. What was I looking at? What fundamental aspects were supporting? How have we, what's the sentiment like? And just those additional data points that over 1,000 trades we can use that data. Like, don't look at it over 5 trades or 50 trades. Look at it over the course of 1,000 trades, right? 500 trades. How much data you can get. Oh my gosh, I'm getting excited thinking about it because it's just the long-term game. That's what this is about, right? And that's why we need to do these because it's over the long term, right? We can have an edge that's 90%, but you didn't know that 90% was accounted for over the course of 1,000 trades. So you're gonna have to lose 100, right? Or you're gonna have to lose 10 if it's over 100 trades, right? And that's just how it goes. That's just how it goes. And so predefining and accepting our risk, right, is highly, highly important because it allows for you to gather data, right? Logging your trades. This is why we talked about this, logging your trades. So when you are acting outside of your system, which as I mentioned before, I'm totally okay with that as long as we're getting data and we're predefining and accepting our risk, right? And then we're thinking in probabilities. What does that mean? That means you do not know what's going to happen next, but you do know there is a chance that what you have identified as your edge will happen next. You don't know if it's going to be this next trade or the following trade or the one after or the one after. But what you do know is that eventually that edge is going to present itself. And so we have to continuously train our mind to think in probabilities, right? What is the probability that this outcome will be the outcome that I'm looking for, right? And that is dependent based on your edge and how it was identified. And if you have a high probability edge, right, then how you would think about this is, okay, I don't know what's going to happen next, but what I do know based on my edge, there's a high probability it's going to happen the way that my edge has shown me in the past, right? And no one move is the same in the market, so every time your edge presents itself, it's a brand new reaction to price, right? Because no one move in the market is the same, right? And so we constantly train our mind to think in probabilities, but never having a 100% bias, right? Because along with thinking in probabilities for our edge, we also have to think in the probabilities of, okay, there is a chance that this does not work out. And what protects us with that? It's accepting our risk, predefining our risk and accepting it. Okay. So these are the three things that I wanted to go over today, to break the illusion and the sh- the grip we have on wanting to be right, because it is human nature for us to protect our opinions and our beliefs and our perspectives. That is human nature. It's completely separate from something that is created on the chart. It is something that is created as we've grown up, as we've experienced and encountered things, as we've given our perspective, as we've shared opinions, as all that has gone on, we have taken that from our daily life. And now when we're looking at the charts, the market requires us to look at it in this way if we are going to be consistently profitable, and if we are going to stay in this, and if not stay in this thing, but thrive in these charts, thrive in the market over a long period of time. I want to be doing this until I'm toast. All right. And so I want to be able to thrive that entire time and maximize the opportunity that is at hand here with the charts. And I can only do that over a long period of time and be profitable consistently if I'm doing these three things. These aren't the only three things, but these are some very key factors for us breaking the illusion from needing to be right. We're predefining and accepting our risk. We're logging our trades. That was a side note, but we're logging our trades, right? We're thinking in probabilities. If you haven't, just look up Mark Douglas thinking in probabilities on YouTube. There will be plenty of videos for you to watch, but there's even so some of his seminars that he's done, he's had people there and they even ask questions, and we're talking about experienced traders asking questions. And why that's really cool is you can hear the way that some people that have spent time in this game and have made thousands of dollars in this game, you can still see the way that they think, right? And that's why they're at that seminar, because they needed something to hit their breakthrough, right? And so watch some Mark Douglas thinking in probabilities. And finally, last but not least, identify your edge. You can only identify your edge through back testing, through engaging with the market. Um, so I like to call that forward testing. And then, like I said, you can always get a part of a community that has defined a particular strategy that you simply just need to follow. There are no one size fits all trading systems, in my opinion. You know, but there are some trading systems, and I said some, there are some trading systems that are adaptable to all. It doesn't fit everyone the exact same, but it does have the ability to adapt to each individual trader. So predefine and accept your risk to reward. Think in probabilities. You don't know what's going to happen next, and do not think you do, because if you think you know what's going to happen next, you are still holding on to the grip of thinking you can be right, and you cannot do that in the market. It doesn't care about being right or wrong. It's merely just information for us to interpret. And then finally, identify your edge. Okay, identify your edge. To do that, you got to put a little bit of time in. But I really, really hope this video helped you guys, because I know this has helped me develop as a trader, and it's something that I continuously think about when I'm trading. I even have a card on my desk right here that I look at um, every time, right? And I have about 10 different cards that I go through. Just sometimes I'll read them while I'm trading, or before I'm trading, or the night before I'm trading, or just when I'm sitting at my desk working. But this one says embrace uncertainty. It says embrace uncertainty. See uncertainty as your edge. The market's unpredictability is not a threat. but an opportunity for those prepared to handle with grace and strategy. The market's unpredictability is not a threat. That is the message behind what I got, what I went over today. The market being unpredictable, it's not a threat when we predefine and accept our risk, when we're thinking in probabilities, and when we're identifying our edge. So other than that, EHM trades, if you guys have anything, put them in the comments. We'll get to them. Hit that subscribe button. Don't forget to do that before you close this app. Other than that, it's like I said, EHM trades. I'm out of here. Peace.